Hi there, I'm ARK, and this is my channel, Get ARK. In this episode, we have a special guest, Cathie Wood, the CEO and founder of ARK Invest. Many of you may already be aware of Cathie Wood. She's risen to fame by picking innovative technology stocks like Tesla very early on and made a fortune from them. Her company, ARK Invest, is one of the popular managers of exchange-traded funds, or ETFs. Thank you for joining us today, Cathie.
Innovation is the key to growth.
Picking new, high-quality tech stocks can be really challenging since so many of them have the tendency to fail. How do you do it, Cathie?
I find the smallest, most ridiculous tech companies and throw millions of dollars at them. Small, ridiculous tech companies are the key to innovation, and innovation is the key to growth.
How does your team do research to ensure that these new companies can do what it is that they claim they can?
We use magic 8 balls.
Excuse me, I thought I heard you just say you use magic 8 balls?
That's right. We use those magic 8 balls that we flip over, shake, and then we do what they tell us to do. Magic 8 balls are the key to innovation, and innovation is the key to growth.
From its bottom in March of 2020, your flagship ETF, the ARK Innovation Fund with the ticker symbol ARKK, rose almost 400% from that bottom to its all-time high. However, 2022 hasn't been very kind to your ETF. In fact, it's sold off more than 80%. At the time of recording of this video, at its 2022 lows, ARK was only up 6% from the pandemic bottom. As my viewers know, I'm not a professional investor, but don't you want your investments to increase in value, not decrease in value?
Not at all. When you're talking about innovation, which is the key to growth, many startup companies go completely bankrupt, losing everything. Losing everything is the key to innovation, and innovation is the key to growth.
Okay, well, many market analysts point out that your ETF has a tendency to buy at the height of a run and then sell at the bottom of a sell-off. What's your firm's strategy to buying and selling?
Unadulterated panic. Whenever it looks like we're missing out on a bull rally, we panic and FOMO in to make sure we buy our entire position near the top. Then, when a stock crashes, we panic and try to get the biggest losses possible by selling near the bottom. Panic is the key to innovation, and innovation is the key to growth.
So basically, your approach is to invest in companies regardless of what they're worth and whether or not they can actually do what they say, regularly buying and selling them at the worst possible times, and believing that you're right regardless of what the market or anyone else tries to tell you.
Exactly. Everyone knows arrogance and hubris are the key to innovation, and innovation is the key to growth.
Do you have any of your own money invested in your ARK ETFs?
Oh God, no. I have none of my money in my ETFs. Have you seen the absolute garbage ARK invests in? I only do that with other people's money. I'd never take on that kind of risk personally. That's insane. I'm nearly 70 years old and I need to retire someday, Erky. I only invest in quality companies and solid index funds, not insane innovation ETFs like mine. Stable, disciplined investing is the key to wealth, and wealth is the key to retirement.
Truthfully, I have nothing against Cathie Wood. Her relatively non-traditional approach to investing in companies may actually pay off in the future. However, if ARK does succeed, it'll likely be because of luck, not because of discipline. ARK's haphazard approach to investing in companies that have no proof of concept, as well as really poor timing of buying and selling, could very easily be the ETF's undoing. If you're a long-term investor like me and you need your wealth to grow over time in order to be able to retire, you can't just throw it all into a speculative investment. If that investment fails, then suddenly you can't retire. So you need to be disciplined and diversify your investments. You can't go all in on one sector, even if that sector is crazy growth stocks. If you follow Cathie Wood's path and she does great, then that'll be awesome. You'll do great too. The problem is, if she's wrong in her approach, then you can't retire. Cathie Wood will be fine. She has plenty of money on the sidelines and will be able to retire. But if you're all in her ETF and it goes to zero, you're out of luck. I can't afford to be wrong, so I never try to be right. By being diversified and disciplined in my approach to investing, I'm never really right. I never win everything. However, more importantly, I'm never entirely wrong. There's nothing wrong at all with investing in a speculative investment. The key is to control your allocation. It's what investors call risk management. Instead of thinking about how much money you could earn or win if your investment goes up, you need to think about it in terms of how much money are you willing to lose entirely. If you invest too much money in a speculative investment and it goes to zero, you will be devastated and potentially get scared out of investing ever again. The key to controlling this is risk management. It depends entirely on you. You have to make sure that the money you put into a speculative investment is money you're willing to lose in its entirety. I'm invested in a large number of speculative positions. I actually have a dedicated portfolio called Speculation in Play, and you can follow my trades absolutely for free at getark.com. To me, investing isn't gambling. It's not about putting all your money in a risky investment and hoping it goes up. Investing is the way for me to grow my money over time so that I'll eventually have enough wealth that I can be able to retire one day.